Thank you very much, everyone. I'm going to talk today about the insurance...
Left and right.
Left and right, thank you. The insurance of cyber risks. Covers a multitude of sins, however, and this is an area, cyber risk generally, but also the insurance of cyber risks, how the insurance industry responds to its perception of those risks that's like sand going through your fingers. I thought I'd start, first of all, by just reading out very briefly. John, can I get 1 extra minute? I've only been given 5 minutes. But very briefly from an email, I'm not just going to try and play with my smartphone during my own talk. When you get a new smartphone, you tend to get very overexcited and to download millions of apps that you never actually look again. This is one of them. I won't say who it's from because I think this is all being properly recorded. But this entity's operations and securities team has discovered and blocked suspicious activity on our network that appears to have been a coordinated attempt to access secure areas. We've decided to implement a password reset. In our investigation, we have found no evidence that any of the content you store was accessed, changed or lost. We've also seen no evidence that any payment information for customers was accessed. And then this is me being a lawyer, I'm slightly confused. The investigation has shown, however, that the individuals responsible were able to gain access to user information, which includes usernames, email addresses associated with us, and encrypted passwords. Even though this information was accessed, the passwords stored are protected by one-way encryption. In technical terms, it says, they are hashed and salted, which I think is something that Jamie Oliver specialises in more. While our password encryption measures are robust, we are taking steps to ensure your personal data remains secure. I'm a little unconfident at this point and will investigate further. As recent events with other large services have demonstrated, this type of activity is becoming more common. We take our responsibility to keep your data safe very seriously, and we're constantly enhancing the security of our service infrastructure to protect us and your content. Now, the messages are very good, and if I was an insurer of that entity, I would be relieved. But an insurer nowadays, given the range of risks and the scale of risks involved in relation to the cyber world, if I can put it like that, will want to dig a little bit deeper. And increasingly, any insurer of some of the risks we'll be talking about will do a lot more digging and expect there to be a much stronger partnership between them and their insureds. Just very briefly, and I have only 5 minutes or so, I appreciate that, John. Looking through some of the key risks. Well, there are operational IT risks, customer information theft, hacking. There are, I've just mentioned there, 1 million global victims of cybercrime each day. That's according to very recent European Commission statistics. Are there greater risks for smaller businesses because they don't have the resources to coordinate in ways that I will come on to in terms of planning for and preventing some of the risks we're talking about? What about the use of social media, defamation and other risks in relation to that? One thing I should mention is that Chubb, the insurer, conducted a survey recently. 65% of those insureds surveyed said that cyber risks were the #1 area of risk. Only something like 1/3 of those, however, had taken out insurance to cover those risks. That's their #1 risk. Well, what are the fears? I'm focused on the UK, although I'll touch on some US related issues later. Expanding legal and regulatory obligations, business income losses, the costs for an insured of restoring proprietary electronic information, legal defence costs to the extent third parties may be making claims on you for data privacy breaches, costs regarding regulatory investigations and settlements where we're dealing with appropriate sectors and potentially strong regulatory responses. And what about the impact on share prices of cyber security breaches? A good example of that would be the global payment situation. That's actually a US situation in Atlanta, where in April 2012 there was unauthorized access of global payments data, as a result of which some of the payment network operators, including MasterCard, lost immediately something like 1.8% in its share value, and Visa 0.8% in its share value. So it's very much a joined up world. Then, of course, there's reputational impact. And again, when I receive an email like that this morning, I'm going to react to it, and potentially, if it's sufficiently newsworthy and they're felt not to be conducting appropriate due diligence as a response to the problem, then there will be a reputational impact on the sender of that email. Just looking briefly at the security issues, we have malware and other viruses, incidents caused by data providers, malicious employee activity, including internal hackers, attacks on web applications, theft or loss of mobile devices, privacy, managing confidentiality and the use of contacts. Also data protection rules and the risks associated with that, even stronger in the US, but these are all very significant areas of risk. In terms of data protection rules, a recent example is a breach of the Data Protection Act by Toshiba Information Systems, where personal data of 20 competition entrants were compromised by, personal details were compromised by a security flaw on the website of Toshiba Information Systems in April of last year. The Information Commissioner's Office found the measures in place were not sufficient to detect web design error, and that's an increasing problem in relation to these interactive websites. Obviously, there are a number of stakeholders in any business. Some of those stakeholders may cause the problems: customers and clients, employees, suppliers, shareholders, regulators. So what should you be doing? And maybe here I'm wearing my insurer hat on this occasion, although I'm focused on the needs of the insured. Planning and prevention. Well, in an ideal world, there should be greater coordination. Have you got a Chief Information Security Officer? Have you got a written IT security policy? Can you increase your budget in difficult economic times for infrastructure and training? Can you develop a new IT infrastructure? And remember again the email I received this morning which talked about a new IT infrastructure. That would require regular updates to your antivirus software. I'd also add a strong password protection, and there are password management systems, electronic password management solutions that can be purchased. Secure configuration for network devices such as firewalls and routers, encrypted memory sticks. You should also improve and regularize security and risk training for employees. Continue to review on a very regular basis your social media policies and protocols. And finally on the list there, you need to review your insurance protection urgently. Because if you're the kind of business that handles confidential information, most businesses do now, but confidential information in relation to third parties, then the exposures for you, legally and in regulatory terms, are increasing all the time. So what sort of insurance cover is available? Well, traditional policies, and I'm leaving out here FI, which is on the second bullet point, traditional policies don't cover the kind of risks we're talking about now. An E&O cover, for instance, will require evidence that you're providing professional services at the time you're suffering from loss. There also will be issues concerning whether there's evidence of negligence on your part. A commercial general liability cover will tend to exclude, a traditional cover will tend to exclude web advertising, for instance, and other, if you like, more modern risks. A property cover will require evidence of physical loss. I mentioned there is increased capacity for tailored cover, and we'll be coming on briefly to some of those covers, mostly in the 10 to 15 million euros range, although the insurance markets will look at layered programs to a higher level. To the extent that you can go to different markets, you might be able to purchase higher cover. Also, for bigger businesses, it may well be part of their thinking in relation to the establishment of a captive insurer, which then gives you better flexibility in terms of going off to the external markets. Complex businesses facing complex risks nowadays, these are broadly the areas that they will need to be looking at: data protection risks, risks to them and the losses they may suffer, and costs associated with that they may want to claim on in their insurance on their insurance covers, notification costs, IT forensic auditing, crisis PR assistance and brand management. Again, going back to the email I received this morning, I'm sure there's an awful lot of work and therefore cost that has gone into that. Other data protection risks, third-party risks, your privacy liability. In a global world, thinking about jurisdiction issues, there will be people potentially suing you from many countries in many different forums. Security liability, similar proposition. Your own business interruption losses. Now, if you are to take out insurance cover, and there are, I'll come on very briefly to some of the new types of cover, it's a tough underwriting process. The insurers will want to understand your business very, very deeply. In terms of the types of covers that are available, this is driven more by the US situation. They have even tighter data protection rules and so on. But some of the types of cover that are much more bespoke now include network security liability cover, media liability cover, privacy liability, crisis management or identity theft response funds, cyber extortion, network business interruption, data asset protection, all frightening terms, but all very necessary for a lot of particularly global businesses. If you have one or more of those covers, issues to bear in mind. These are first response covers. You're facing a crisis. You want this insurance to potentially kick in. You want to get the buy-in from your insurers. Early notification is absolutely crucial, and there will be type notification provisions in there. You mustn't do anything that prejudices your insurer's position as well. For instance, you need to protect their subrogation rights. They may pay you, but they will expect your cooperation in terms of going after third parties who may be responsible for the losses, the hackers, commercial competitors, and so on. Again, these are global risks. Social media, cloud computing, and so on, and that's for another day in terms of a talk, but these are very, very difficult issues for you to walk through and ensure you have proper cover. Again, these are complex matters. You need specialists involved, and there are specialist brokers. A lot of the larger firms of brokers now have regular, almost monthly conferences for clients and potential clients to deal with the range of cyber risks that they're facing. It's a partnership with the insurers you do have, you do manage to take cover with, and it's one I think that, again, the email I received this morning, I would suggest is a partnership that requires regular communication and management by the underwriting industry. Otherwise, they will suffer huge losses and will pull out of the market, and insureds will be left in the potential nightmare scenario. So, sorry to spoil your breakfast, but these are difficult issues. I will be going off to check that my personal data hasn't been damaged in the course of hashing and whatever else, salting, I think it was. But I'm sure there will be more issues to discuss in due course. Many thanks.